have $500,000 in my 401k. How can I use asset allocation to protect against market volatility?
Okay. Well, good job on saving that. It's all going to depend upon, really a deeper part of the question, kind of who you are, where you are in your retirement career. So obviously you want to look at protection of somebody who's done a great job and saved this in their 40s. That's great. You've probably got more years ahead of you before you retire, I would expect. But somebody who's maybe in their 50s about to retire and needs that money might want to be more conservative. So that goes into that asset allocation. We talked about it on a high level, but generally speaking, asset allocation is that diversification between stocks, bonds, money markets. We can get more technical in there in various sectors, real estate, alternatives, and things like that. But for most of the 401ks, simply put, you're usually looking at stocks, bonds versus cash. So obviously, somebody wants to protect themselves more in their 401k. It would be looking at adding more bond exposure, which it's going to depend. It's best to give us a call because a lot of 401ks we work with, excuse me, actually also have what's called a stable value fund in there. It's a GIC, a guaranteed insurance contract. It's like a money market, but usually pays more. So a lot of times we're going to recommend maybe a split between bonds and that because you have a higher guaranteed yield there. But at this point in the market, we're finally hopefully moving back towards the norms we've had. We're coming out of that bull market of bonds having the interest rates been driven so low, they're getting higher again now. So you're getting good yield on those. So generally speaking, the 401k, it's introducing bonds and maybe some cash into that portfolio. But again, it's important to give us a call to look at that one-on-one because I have no idea how old you are or what you really are trying to achieve in this goal.